Hello, and welcome to this session on decentralized finance, or DeFi. My name is John Frost, and I'm a senior economist in innovation and the digital economy at the Bank for International Settlements in Basel. I'm very privileged to host and moderate this session today on DeFi for participants in the public and private sector around the world. So DeFi is growing fast, offering a range of services from lending to insurance to wealth management. DeFi uses new technologies, in particular DLT, to decentralize risk-taking, decision-making, and record-keeping. And this could have far-reaching implications. So the Financial Stability Board, in its report to the G20 under the Japanese G20 presidency, noted that decentralized technologies could benefit financial stability, leading to greater competition and diversity in the financial sector. Yet there could be new risks. In particular, there might be challenges around accountability in a world without financial intermediaries. And there's a question of whether our regulatory frameworks are ready for a world of self-driving banks. So to tackle some of these questions, we're very privileged to have an outstanding panel, and I'd like to introduce each of these panelists in turn. Let me first introduce Joe Lubin. Joe is a giant in the DeFi space. He's a co-founder of Ethereum with Vitalik Buterin. He's the founder of ConsenSys, a global blockchain technology company. ConsenSys has led the charge in the Ethereum ecosystem, including through the Enterprise Ethereum Alliance, which is a global standards organization for business applications of Ethereum with 500 members. Joe hails from Toronto. He's a graduate of Princeton. And prior to founding ConsenSys, he worked in fields from robotics to autonomous music composition to finance. So Joe, thanks so much for joining us.
Thanks for having me, John. Before we went live, we were given the opportunity to register a disclaimer, so I'll take this opportunity to indicate that all of the views that I express are mine and do not represent the views of the decentralized protocol community by definition.
Thanks, Joe. So next, I'd like to introduce Commissioner Hester Peirce of the United States Securities and Exchange Commission. So at the SEC, Hester is a leading voice for innovation in the US financial system. Among other things, she's argued for a safe harbor for blockchain token projects and for a regulatory framework that works well for decentralized applications. Hester holds a JD from Yale and previously worked as a senior counsel for the US Senate Committee and in counsel roles at the SEC. Hester, thank you. We're very pleased to have you to bring your deep regulatory perspective to this panel.
John, it's a delight to be here. And of course, I have to give my disclaimer, which is that my views don't represent necessarily those of the centralized US Securities and Exchange Commission or my fellow commissioners.
Thanks so much, Hester. So our third speaker is David Huth, who is the CEO of Centre. Centre governs the technology, policy, compliance, audit, and reserve standards for USD Coin, which is a dollar-based digital currency. David was previously CEO of CLS Group, the world's leading provider of FX settlement services. He was also a member of the New York Federal Reserve Foreign Exchange Committee, the Bank of England Joint Standing Committee, and, of course, close to our hearts, former chairman of the BIS Markets Participants Group. David brings the inimitable perspective of someone who knows both CeFi and DeFi. Thanks so much for joining us, David.
Hey, John, it's great to be here. I've been deeply impressed with the work that the Innovation Hub is doing, and I'm very pleased to be part of this panel. My only disclaimer is that my views will reflect those of the views of Centre, the company I represent, and I'm very pleased to be able to do so. Thank you.
Thanks, David. And fourth, let me introduce Sheila Warren. Sheila is head of blockchain and data policy and a member of the executive committee at the World Economic Forum. Sheila has been hugely influential in the debates on cryptocurrencies, blockchain applications, and central bank digital currencies, in particular by giving a voice to civil society and nonprofit organizations. Sheila has her JD from Harvard Law, and she began her career as a Wall Street attorney before turning to philanthropy and nonprofit tech. Sheila, we're really glad to have you here. Thanks for completing this excellent panel.
Thanks so much, John. It's a pleasure to be here. I'm really looking forward to the conversation.
So let's jump right into the first part of the discussion. So Joe, at Consensus, you've worked on decentralized finance since 2015. Elsewhere, you described the economic value that composable, interoperable DeFi tools could unlock. And I wanted to ask if you can give us some concrete examples of potential benefits.
Thanks, Sean. So really, the first benefit is the foundation upon which DeFi is built, the decentralized protocol technology in the form of blockchain, essentially a next generation architecture for databases. This brings a paradigm shift in how the world will imbue transactions, processes, and relationships with trust. So we're moving from millennia, essentially, of subjective trust systems to an automated objective trust infrastructure that is now possible. It's this new open trust foundation that enables entrepreneurs and technologists to do what they did with the web protocols. They essentially brought democratization and rapid innovation to a previously highly controlled space. And so they enabled anyone to have access to info, to publishing, e-commerce, social networking, and media globally. Entrepreneurs and technologists are now building decentralized finance protocols for a wide variety of traditional use cases like lending, borrowing, yield on savings accounts, asset issuance, trading, insurance, etc. But these protocols can be permissionlessly wired to one another. This is called composability. So they're being called DeFi, or decentralized finance Legos, and this enables much more capable systems to be created rapidly. This brings new use cases, things like flash loans that must be repaid in 15 seconds after they've created some economic value, lossless lotteries, automated securitization. DeFi is building the early stages of a much more seamless global financial infrastructure. The current one is very siloed, with nation states linked by essentially correspondent banking relationships. Our planet is increasingly in need of systems shared across nation states on which companies in those nation states and the nation states themselves can transact and trust that the rule systems that mediate those transactions will be honored, will be automatically applied.
Thanks, Joe. And just as a quick follow-up question, can you tell us what you see as your own role in the DeFi space?
So first, Ethereum's role is to serve as that new automated trust foundation. There are two systems that are sufficiently decentralized to serve as a next generation trust foundation. They are the Bitcoin network currently and the Ethereum network. The Ethereum network is far more programmable than the Bitcoin network. And so it's the place where the technologists, the entrepreneurs, the innovators are building out infrastructure. So any asset that is expected to be high value by its issuer should be issued on Ethereum, because if it's issued on other platforms that are far less decentralized, it can be improperly manipulated by the operators of those platforms or subject to other possible failures. And so an asset can migrate elsewhere from being issued on Ethereum, and there are bridges that are built out of less trustworthy mechanisms, but some bridges are being built that enable the full trust model for Ethereum to be applied to what's called layer 2 systems, so that people can transact on those layer 2 systems with the full security of the Ethereum platform. This enables it to be the main venue for decentralized finance, and it's serving right now as a hub for other networks to connect to decentralized finance, bringing some scalability and other functionality. For instance, there's about somewhere north of $1 billion worth of Bitcoin wrapped and migrated over to Ethereum so that it can participate in decentralized finance. Our company Consensus has a sizable role in the Ethereum ecosystem, and we're branching into other protocols. So we have some dominant platforms. One is the MetaMask wallet for consumers. Another is developer tooling and developer infrastructure. So that's Infura and the Truffle developer suite. And we also have the Quorum platform for enterprises and other organizations like central banks. We're able to deliver functionality to consumers through our MetaMask as we do for, say, a token swapping facility. And we can enable developers to access the exact same APIs and build those systems into their own software systems, and we can expose that same functionality to enterprises.
Thanks a lot, Joe. So let me turn next to Hester. So Hester, DeFi is still small, but it offers a potentially radical shakeup of our financial system. So it could be that verifiable code could replace trust in central intermediaries. On balance, what do you think this means for the efficiency and stability of financial markets?
Well, I think it's difficult to tell at this point. I mean, I think there is some hopeful promise that it could help the resilience of the financial markets by moving away from centralized potential points of failure to a more distributed approach that means that no one particular point is particularly important. And so I think that that's promising. You know, a lot of what's happening in DeFi is really outside of what the SEC's purview is, because a lot of it has to do with more banking-like functions than I would say securities-like functions. But it has been fascinating to see the growth. And so I think at this point, as regulators, you know, we're watching what's going on, and I think any kind of wholesale shift in the financial system will take quite a long time. My latest favorite metaphor for this whole thing is that I think eventually you get to the point where you've got the DeFi mullet. So you've got the centralized, the more centralized front end that people are used to dealing with, and then perhaps some of the operational stuff is being done in the back end, but most people really aren't interacting a whole lot with that.
So it's business in the front, party in the back.
That's right.
So Hester, as an SEC commissioner, how do you see your own role in this space?
Right now, one of the key things I'm trying to do is make sure that my agency does pay attention to what's going on in the space. I mean, I am concerned that much has happened in 2017 with the ICOs, is that a lot of activity was happening. We were slow to give guidance, and frankly, we still haven't given guidance, but we were slow to give guidance. And so people did things that potentially implicated the securities laws, perhaps didn't realize that that was what was going on. And so, as I said, I think a lot of what's happening in DeFi is outside of the SEC's purview. But to the extent that people are building things that are, you know, intended to mimic securities or, you know, doing things related to asset management, that would fall within our purview. And so I encourage people to be thinking about potential securities implications. Another area I think that this comes up is if you set up some sort of decentralized exchange or automated market maker that is trading securities, among other things, then you have to think about what the implications are there. Now, that poses all kinds of interesting challenges for us as a regulator, because we are used to dealing with the centralized counterparty. But I think those are things that people engaged in the space need to be thinking about.
Great. Thanks a lot, Hester. So, David, your own background as CEO of CLS gives you a unique perspective on the relative promise of CeFi and DeFi. So what drew you to Center? What lessons do you think you can apply at Center? And how do you see your own role in this space?
Well, if I look at the opportunity I had at CLS to work with both financial technology, payments and settlements, and eventually doing some work in the blockchain space, I think it was a great preparation for the opportunity that we have at Center to advance the mission of growing a global network of stablecoins commencing with USDC. My attraction to the opportunity was just seeing the extraordinary nature of what was taking place in the blockchain space today, with DeFi being very much a part of that. And not unlike what took place in the internet in the late 90s, the seemingly limitless possibilities of what can take place with using distributed ledger technology and blockchains, and sort of closing with the promise of stablecoins and what we hope to be a true global network of center standard stablecoins. In terms of risks and lessons that I take away from my time at CLS, and maybe my time in banking as well, as they might apply to decentralized finances, I think as we grow, as this industry grows, and we're excited about the role that USDC plays in the DeFi world today, we all need to be conscious of some of the things that Hester and Joe both highlighted. There are tremendous numbers of opportunities here, but there are risks that come along with it. There's risks of losing principal. There's risks of technology breaking down. There's risk of people unwittingly doing things in the DeFi space that can't be undone, and then no recourse with the party. So I think as an industry, we need to work together and work together with regulatory bodies, which is something we had a great deal of experience at during my time at CLS, to be able to ensure that we enable this business to reach its full potential. We're just in the infancy today, but the promise of what can happen on decentralized finance, and frankly with stablecoins and that interaction is somewhat limitless. And to me, it's a tremendously exciting opportunity.
Great. Thanks a lot. So I wanted to turn to Sheila. And Sheila, at the World Economic Forum, you have an overview of the public and private sector thinking on DeFi. What do you see as your own role, and what's your view of the promises and perils?
Thanks, John. Well, I think our role is similar to what it's been around blockchain technology generally and crypto specifically, which is provide a neutral place that could be on the hype and that focuses on what I like to call pragmatic optimism. So recognizes the tremendous potential of these technologies, but also we point out the practical, perhaps impediments or need for modes of practice and ways of creating inclusion in the space that we. I think that our role, because we are not a competitor to anyone in the space, we are a body that is, we don't have skin in the game the way that most people who are deeply involved in the space do. We are able to curate communities of practice that sit across stakeholder sets that are global in nature or cut across different geographies. And therefore, we can create learning communities that really help inform each other about where pitfalls may lie and what the promise actually is. I think that we are really focused on ethics and inclusion in the work that we do across our entire team. And to that end, we've done things like launch the Presidio principles, which focus on how do we ensure that decentralization is maintained in the application layer. And we are releasing over the course of the spring 2 different pieces of work. One is called DeFi Beyond the Hype, which is a callback to Blockchain Beyond the Hype, a paper we issued in 2018. One is really a paper framing what is the potential here and where might things be not quite ready for prime time. And the next is a toolkit. And we're releasing these things and created them in conjunction with the Wharton School at the University of Pennsylvania. So it's these kinds of outputs that we hope are going to help shape and bound the space, but really encourage everyone in the space to be thinking big, but also to remember that if we don't think hard about grounding an inclusion frame in the work that we're doing, it's just not going to happen automatically.
So Sheila, one follow-up to you. DeFi is often promoted as a force for greater financial inclusion, and you mentioned this just now. Do you think they can fulfill these hopes? And if so, what needs to happen to reach the unbanked and underbanked?
Well, I think that's quite the question, John. There's a lot to unpack there. First of all, let me start by saying I absolutely think that DeFi is promoted as a force for greater financial inclusion. And I find a lot of those claims to be interesting. I believe in the potential very strongly, but I think a lot of people use that talking point, let's say, as a mechanism for claiming greater inclusion when they're actually not working. So again, these things don't happen by accident. You have to really think about what the problem is you're trying to solve. And every single time, I think when we look at any kind of product build or technology build, we have to look and see what is the problem space. Financial inclusion is a massive problem space, right? There are things within there that are more conducive to being affected in a positive way by DeFi, and some that are just really overarching challenges. Things like barriers to limited digital and financial literacy and numeracy. Things like lack of wealth to begin with, lack of an entry point. You don't even have any wealth to enter the DeFi space to begin with. That's an ongoing systemic problem that's not going to be solved by a new mechanism for engaging in lending or credit or whatever it might be. And of course, last mile digital infrastructure is a core problem. We think about extreme poverty in the world, infrastructure and lack of access to internet or digital divide, problems like this, they're not going away. And sadly, DeFi can't solve them. So I think in my mind, we need to be thinking a lot more as an entire community about how we're bridging to last mile. There are many solutions that have been offered over the course of time to how we reach parts of the population that don't otherwise have this access, and making sure we're building connection points into that is a really key way to enhance financial inclusion that I don't hear talked about that much. But again, I think to ground this, I think the potential is tremendous, but I just think that we have to be very mindful of what we're aiming to do in order to get there.
So, Joe, maybe turning back to you, can you give us a couple of concrete use cases that you think could help, especially on financial inclusion?
So I would agree with Sheila that in these early phases of development of the technology, it's sharp around the edges. Things are being pioneered and certainly not ready for prime time, and can have limited impact on deep global systemic issues. Though cryptocurrencies themselves are giving relief to certain people in certain nation states, and through remittance systems, money can be less expensively distributed, and we have our own issues around the cost of transmitting transactions. Micro lending systems can be more effectively built, so I think there will be significant impact, but it'll take time. Payments themselves are being embraced by organizations like PayPal, Visa, Square, and they're doing that because the cost of a payment on average is around a little under 3%. But again, the cost to people who can't afford it can be closer to 5 and 10%. So payments will be a massive innovation, or already is. Self-custodying wallets are a massive innovation, where you don't need a custodian to handle your fungible tokens, your non-fungible tokens representing different things, art, real estate, etc. Identity in the form of decentralized identity, along with verifiable credentials to enable you to access things that are in need. Digital asset issuance and full lifecycle asset management is a big use case that can involve issuance of equities, bonds, derivatives, synthetics, automated portfolio optimization. The way we trade tokens, decentralized exchange, and different kinds of liquidity pools are going to become fairer, in my opinion, as we enable peer-to-peer trading, as we build systems that can't be front-run, credit, lending, borrowing, savings accounts with non-trivial yield in zero interest or negative interest environments. Insurance, a wide variety of different protocols are being developed, from parameterized insurance systems to automated payout mechanisms where machine-readable proof of an event can trigger a payout, either in a weather situation or perhaps failure of a smart contract, mutualized protection, crowdsourcing of capital in insurance, different custodial services, including decentralized custody using multi-party computation, real-time auditing, risk metrics, sensitivity analyses, forensics done on complete and immediately available information. I could go on, but I should probably stop.
Thanks, Joe. That's certainly a great list of use cases, and we appreciate the insight on the concrete applications. So before we go to the next session, I just wanted to give Hester the floor once more and ask Hester, which risks in DeFi worry you? We've talked a little bit about the risks, but is it primarily the risks about accountability? Is it that we don't know, who's accountable when things go wrong, or which risks do you think we should be most concerned with?
Well, I think that is a risk. I mean, it's an area that for us regulators who are used to dealing with a central counterparty to whom we can go, and to whom people using the service can go when there's a problem, that is certainly a risk. I think there are ways to deal with that risk. I mean, Joe just mentioned insurance. You could set up a system to mutualize losses in that kind of a scenario. But I think another risk from my perspective is that often people aren't really thinking about regulation until there's actually a problem. And then when there is a problem, they really want there to be a regulator to go to, and they really want there to be a way to reverse the bad thing that happened. And in the case of DeFi, there may be neither. And that could be really problematic for people, and they'll only find out about it, or they'll only really focus their thinking on that point when something does happen. So I think that's something that both we as regulators and people using these DeFi services need to be thinking about.
Great, thanks. So I think that we're ready to go to the second part of our session. So the second part of our session addresses the question, can DeFi deconstruct or reconstruct global finance? So I think we're particularly interested in the connections between the centralized and new decentralized systems. So maybe here I'll start with Sheila and ask, again, a very broad question, but does DeFi reflect a fundamental shift away from centralized finance as we know it? Or is it just another high-yield asset class?
I would say it's both. I think that's not dissimilar from, well, let's analogize to Bitcoin. I said before, and I realize it's blasphemy in some circles, I think one of the least interesting things about Bitcoin is its price. Similarly here, I certainly think that DeFi is going to reflect or spawn multiple high-yield asset classes. But I think what's most interesting about it is the shift away from centralized finance as we know it. But I also think that the intersection point there between CeFi and DeFi is something that I find fascinating to think about how that might operate as well. So I'm going to go with both, John. It's both.
Very, very well hedged. So, David, I'll pose a similar question to you. I mean, do you see a tension between centralized and decentralized finance, or can you envisage a future where the two will converge?
I think the world is absolutely already headed to that convergence. It's simply inevitable. And as DeFi continues to evolve from this very early stage, it will be impossible for the centralized finance world to ignore the incredible potential. And you can easily see opportunities for what would be traditional approaches to business building upon DeFi protocols and creating an enormous new infrastructure and new world of opportunities. So I think it's happening today. It's early, but I think there's an explosive period of growth that's just ahead of us.
And to make them concrete, can you see any of the technologies being used in DeFi space taking off in centralized finance?
No, I guess I would look at it in the same way that we looked at if one looked at a couple of different examples from history. So one would be what M-Pesa was able to do in mobile banking in Kenya 15 years ago, and be able to open up a world that people didn't think was possible. Now, it didn't flourish in the same way that one might have expected, and once it became less operable with other systems, but it was a good example of somebody taking a new technology. I'd say peer-to-peer lending today. We're 10 to 15 years into the true peer-to-peer lending business if we exclude the 50 prior years of what happened in micro lending. But I look at lending as being lending and traditional banking as being very likely sources of things that can operate quite effectively on a decentralized platform.
So, Joe, you have a unique perspective on this as well. I mean, consensus obviously has its origin in DeFi, yet you're also working with quite a few centralized financial institutions, and as we discussed earlier. Amongst other things, you're also working on retail and wholesale central bank digital currency projects. So do you think also that both CeFi and DeFi will coexist, or are you hedging your bets?
So I imagine when people gathered under the buttonwood tree that they, for a moment, called it buttonwood finance, and then it moved to paper finance, and then it moved to computer finance, and then it moved to internet finance, and so soon decentralized finance will just be called finance, and there won't need to be a distinguishing. So we're not hedging our bets. We as a company and as an ecosystem are enabling different classes of actor to make their best use of a powerful new technology. We're undergoing a phase change in society from being a natively analog society to being natively digital, where elements like money, financial instruments, identity, art, and governance are realized entirely in software. This digitization will lead to ease of standardization, automated compliance, and tokenization. It'll squeeze all of the delays and frictions out of current processes. Tokens will represent a wide range of elements in the economy, from tickets to identity to assets like securities, art, real estate. We'll see stablecoins, many different designs and use cases, and we will see central banks making use of the technology as they see fit for their use cases. Some wholesale, like cross-border payments, and some retail, and we're working with 6 central banks currently to help pioneer and pilot some of those systems. Wallets will be designed to recognize tokens regardless of what they represent. Current wallets, like our own MetaMask, can recognize hundreds of different tokens, some representing utility tokens like Ether, cryptocurrencies like Bitcoin, stablecoins, NFT art, identity. And it is easy to enter a new token definition into MetaMask so that it recognizes, say, a brand new token. CBDCs will have more utility if they can be used on different networks. And we see on Ethereum that so many tokens from different networks are being wrapped so that they can participate in DeFi, which sits largely on Ethereum. As I indicated before, there's more than $1 billion worth of Bitcoin wrapped in living and participating in DeFi on Ethereum. It may be the case that it will be hard to stop CBDCs from being wrapped and appearing, being usable and tradable on Ethereum. So there will be many different use cases that are best served by different systems, different financial instruments, and the world will be far better served by optionality.
So I think David has thoughts on this as well, thinking particularly about the complementarity between stablecoins and CBDCs. Do you think that stablecoins and CBDCs will each have their own separate niches, or do you see them as substitutes to one another?
I will certainly see them peacefully coexisting for an indefinite period of time. If one thinks about what has happened with stablecoins over the course of just the last year, I think there's an inevitability for stablecoins to continue to grow. I'm impressed with the amount of attention that central bank digital currencies have attracted, and the commitment on what I gather now are 60 or 70 central banks that have invested a great deal of time in this research. Clearly, there's a lot of attention being paid to China and what's happening there with their developments. But I also recognize, and I think we all do, that central banks move very deliberately, responsibly, and that takes time. And stable coins are here today. Their uses are truly exploding, and I think that will continue to be the case up and through the time that central bank digital currencies gain more adoption. I think that we haven't yet unlocked a future that includes truly programmable money, and I think that will create a number of new opportunities. So I guess the answer to that question is yes, they have to coexist. Every central bank is going to be moving at a different pace in terms of its development, and stablecoins are here today, and they're starting to connect the world, and I expect the pace of that connection only to continue to grow.
Okay, clear answer. Stablecoins and CBDCs will continue to coexist. So thanks, David. To Sheila, I think that the conversation on stablecoins and central bank digital currencies, it also opens up another very broad conversation on transactions data and the privacy around the data that these instruments will generate. So can you tell us a little bit about your thoughts on data privacy and kind of the values conversation that societies need to have about this?
Yeah, well, that's a whole nother session, right? But I think as a general matter, I think it's really important to recognize that we tend to ground this conversation in notions of privacy. And privacy is a very culturally specific, specifically understood concept. And so one thing at the forum that we're really encouraging is for our stakeholders to move beyond definitions of privacy, recognizing their importance in the ecosystem, but thinking about what is data's intended purpose and actual purpose. So I might be very comfortable with my genomic data being used by my local government for purposes of vaccine development or something like that. Whereas that same data, I might have huge problems with it being used, by, I don't know, a cosmetics company or something to create some sort of product that they're going to market back to me, right? And so I think it's shifting away from this concept that we should always hold the privacy of data as the sacrosanct factor, and really recognizing the role it plays in the ecosystem. With that being said, I think you have to ground the entire conversation in ethics. And because I've been kind of on the theme of speaking to vulnerable populations and inclusion, I want to note that you really, when it comes to data sets, have to be on the lookout for potential exploits. And not just technical exploits or hacks, but also how humans, could actually use the data or the aggregated data on others to create massive exploitation. You think about things like refugee populations, right? So even if you might aggregate that data or not share the data, you might create an algorithm, and that machine learning could be used to understand migratory populations, the flow of humanity, across borders in ways that could put those lives at risk. So there's a lot of we have to really start thinking about this as a society more rationally than we have been in the past, and less from just a defensive posture or protective lens, but thinking about where should we not overcorrect and limit the flow of data in ways that actually could have tremendous benefit, but also ensure that we are protecting individuals who may not have the ability or agency within the system to understand even when their data is being collected, or have even any sort of ability to resist the flow of their data and the inclusion of their data into a broader system that does not have your best interests at heart.
And again, to make it concrete, do you think we can trust central banks or big techs with the transactions data that CBDCs and stablecoins would generate?
Well, I'm going to be nuanced, right? Maybe it's because I'm a lawyer, but I think that we have to really ask ourselves, which data, who specifically is using it, and what are they using it for? And what are the incentives of those institutions, which differ very different. The incentives of a central bank around transaction data are very different from the incentives of a big tech platform around that data, or around, a refugee program, just to kind of go back to my previous example around that data. So as a general matter, the hope of blockchain technology, I think, is that we can move from trusted, where we have to kind of trust an institution, to trustworthy systems where we're less reliant on our beliefs or our understanding, whatever they may be, however accurate that may be, quite frankly, of what an institution's motivations are and what they're doing with our data, because we have more ability to educate ourselves about that process and what is happening.
Thanks a lot. So I wanted to shift gears just a little bit. In this session, of course, we're talking about decentralized and centralized applications. And again, getting back to regulation, our current system, of course, is built around centralized intermediaries. And in the United States, of course, there's a strong edifice of rules for markets. I wanted to turn to Hester and just ask a little bit about your own proposals on decentralized finance, in particular your safe harbor proposal for token network developers. So could you tell us a bit about this proposal and how you think it might allow DeFi applications to flourish?
Sure. Well, about a year ago, I put out a proposal that would give a little bit of comfort to people trying to do a token distribution event. The idea is that there are a lot of projects that have gotten fairly far down the road and they're ready to launch the network and distribute the tokens. But there's uncertainty about whether that event would actually be a securities offering under US law. And so the idea was to allow a little bit of a period where you don't have to really answer that question. And so the token distribution event could happen. The developers would put out certain information, make available to the public certain information about the project, about the token economy and other relevant factors. And they would be subject to the anti-fraud laws, so they couldn't lie about that. And they'd have 3 years to develop the network, get it to a point where it was decentralized, so it didn't make sense to collect information from one centralized party anymore, or the token was being used as a utility token. So I think for tokens in the DeFi world, this could be useful. I don't think it's solely useful for that application, but I think certainly DeFi tokens could take advantage of this. I'm working on on sort of refreshing that safe harbor, and we're about to get a new chair at the SEC, and so I'm hoping to present the safe harbor to him and suggest that he do pursue something like it. If not, I'm not wedded to that, but I think we need to provide some clarity for people trying to develop these networks.
Thanks a lot. Yes, and we'll definitely look forward to following that conversation and hearing how the discussions with the new chair go. David, a question for you. What regulatory developments do you see as the most significant or necessary if we want to foster a responsible DeFi innovation?
Well, I think it's regulatory developments for the entire industry, so inclusive of DeFi, but beyond. I think the first great step by the OCC to effectively give greater permission to financial institutions opening up on public blockchains and using stablecoins is a great way to facilitate what I think will be an enormous opportunity for the traditional banking business to engage in what I referred to earlier as kind of the intersection of centralized finance and decentralized finance. So real credit to the OCC on that, and that created a great deal of interest in what we're doing in USDC and in other stablecoins. I think continued focus, and this may be in the more, if I could say, traditional crypto space, but continued focus of working with the industry on the travel rule and that which we know we need to do to be able to expand our business by addressing that issue, which I know a number of us are working very hard on today, but real focus of the regulatory community working with industry to help solve that kind of problem and move things forward.
Thanks a lot. Joe, a question to you on regulation. So we've seen in practice that there can, of course, be risks in DeFi from misconfigurations, adversarial attacks, and perhaps paradoxically for something that's decentralized, also external dependencies on central parties. So do you think that we need regulation to address these risks? And if so, how?
So blockchain technology and decentralized protocol technology in general are essentially next generation database technology. They add trustworthiness to shared data and processes. Globally, different societies and economies will have to decide whether and how they want to embrace this technology. But regardless of which political philosophies a country organizes itself under, increasing the level of trust in many systems, whether partially or massively decentralized systems, will, I believe, be beneficial. The internet and web technologies and protocols have always been decentralized and unregulated. You might argue that certainly electronic components are regulated, but the bigger systems themselves are largely unregulated and were built by groups that had self-organization. It was the uses of those technologies that were appropriately subject to regulation, e.g. banking, payment systems, media, and many other niches. So the trust characteristic of blockchain comes from and is maximized by maximal decentralization. The more independent actors validating transactions on these systems, the more trustworthy these systems will be. Externally regulating the technology would necessarily centralize the technology. And it is important to note that technologists and the regulators have the same overarching goal, to build better systems that serve more people better. So yes, regulators should look to regulate uses of the technologies, but not the technology itself. It is important to note that this disruptive technology is premised on designing protocols that are essentially self-policing, or having protocols police other protocols. A rapid innovation cycle of build, use, break, fix has been underway for a long time in our ecosystem, and that is the only way that highest quality hardened systems can emerge to transform how we build financial, economic, social, and political systems. These systems are just too complex, and the innovation is moving too rapidly for regulators to stay on top of things in real time. Regulators of the future, however, will want to understand the technology deeply and contribute to its evolution. It is all open source technology and driven by open collaborative communities, and I guess there will be a role for separate regulation, but ideally the two communities come together in intimate collaboration.
And Joe, where would you recommend that regulators focus their efforts?
I'm not sure I want to give regulators any sort of directives. We have seen some exciting innovations. 2017 brought token launches, and certainly there was a lot of problems caused by information asymmetries and terrible projects and corrupt projects. But if you actually look, many of those projects, or many of the good projects, have really thrived and have become important pieces of the decentralized finance and other aspects of the ecosystem. So essentially, it's such a rapidly moving ecosystem that regulators should absolutely pay lots of attention, and we've been happy to work with regulators in different countries for a very long time. We're always happy to foster adoption.
Well, regulators are certainly paying attention, I think. But thanks. I appreciate your insights on that. And moving back to Hester, Joe mentioned something about, different societies will take different approaches. And this, of course, applies to the regulatory frameworks and the rules they decide. But do you see a need for greater international policy coordination? And how are you promoting this in practice?
Well, I think this is an area where regulators are talking with their international counterparts. Certainly there's a lot to learn from different approaches that different places take, and I think that's important. We're not going to get to a place where we're all singing from the same songbook, I don't think, because of the thing that Joe mentioned, which is that countries bring different philosophies to how they regulate things, and so I don't think you're going to see uniformity. But as in other areas, I think there are things that we can do. We can be conscious of the limitations of our jurisdiction, something that, frankly, the SEC hasn't always done that well, but we can also do something which the SEC has done in other areas, which is allow for substituted compliance, so that if actors are complying with their home country's rules, and those rules have sort of the same end objective as ours, we can give deference to those rules. So there are things that we can do, but I think in general, where most of the international benefit is learning from one another, sharing ideas about how to approach some of these new regulatory challenges.
David, I think you have a good perspective on this as well. What do you think about the need for international policy coordination in this area? Where do you think that regulators should be in dialogue or working together?
Well, there's simply no question that dialogue, and I think it's starting today, but needs to be accelerated. The pace of growth in our industry today is exceeding anything that would be possible to be able to develop a strong set of regulations around without constant interaction with the business community. And we can look in the past, and I would say I agree with Joe, is the technology of the internet was allowed to flourish and grow without regulating that technology itself. And I would encourage that spirit goes into what we're working on today in collaboration with regulators to focus on applications and areas where where problems might be created, but to really continue to use the power of the internet to grow further. I've worked on several opportunities, including that with the BIS, on public-private partnerships to both exchange ideas, but really focus on trying to come up with concrete solutions. And I think that type of international cooperation, while it's in its early stages today, really needs to be accelerated. What is happening in blockchain and decentralized finance, this is a global phenomenon. It's not going to slow, and we need the regulatory community to be working together to help enable safe applications of the practices that we're all involved with today.
Thanks. Sheila, it'd be great to get your perspective on this as well. What do you think of the need for international policy coordination, and do you see any risks of regulatory fragmentation, particularly in light of some of the societal objectives we have for finance?
Well, unsurprisingly, I think that international coordination and multi-stakeholder collaboration are critically important. That's really kind of the bread and butter of the forum and how we think about approaching most problem spaces. I do think that there is a danger of regulatory fragmentation. I think we've already seen some of this in the more pure, cryptocurrency space. And so I guess I would encourage the coordination that we're talking about, which is something that we help facilitate behind the scenes on a somewhat regular basis. But one thing I want to note, John, that hasn't come up in anyone's comments is advice to regulators as a general matter. I think that we really need to be rethinking our fundamental notions of consumer protection as a society. I think we have a somewhat historically oriented view of who is a consumer and what protection really means in that space. And I think that decentralized finance, but also just things like, GameStop and other kinds of things that have emerged recently are really challenging some of those notions around, again, how we balance empowering consumers and providing agency, which is something I think DeFi is oriented towards, while ensuring that, we're not making it easier for people to engage in transactions that are going to be deeply problematic and hurtful to them financially. So that's one thing I think that we hadn't mentioned yet that I think is of critical importance. And I do hope that that's an area where global coordination can be a bit easier, because it is something that I think pretty uniformly affects most societies, as opposed to different views about, the banking system and other things that are highly regulated in various societies in different ways.
Great. So we're nearing the end of the second part of our session, and I wanted to give everyone still the chance to give us a few closing thoughts, things that you'd like to leave all of our participants with, and perhaps any advice or messages that you think are important to get out there for public sector participants and private sector stakeholders around the world. So, Joe, if I could just start with you, what are some messages or one key message that you'd like to leave our participants with?
We're at an incredibly exciting time, an incredibly complicated moment in our history. We're arguably at the end of a 70-year debt supercycle. We are arguably seeing monetary systems or the monetary regime globally approaching an end of life or a transition period. We have this new invention. I would argue that this new invention isn't just a new technology, but it will bring a paradigm shift in how we structure our systems globally. It's it's the new trust foundation upon which we're building a new global financial infrastructure, which will enable us to re-architect systems. We're seeing significant adoption popularly of things like non-fungible tokens. We're seeing corporations starting to line their treasuries with cryptocurrencies because they are concerned about the issuance of more traditional forms of money. We're seeing zero interest rate, negative interest rate policies around the world, and we're seeing significant yields available in decentralized finance. And that's essentially based on supply and demand. And so there are a lot of things that people want to use cryptocurrencies for in the decentralized finance space, and people are willing to pay to borrow essentially in that space. And I would argue that we have years or decades ahead of us in affecting this paradigm shift, and the supply for the higher valued tokens will be highly in demand, and those supplies are well defined. And so I anticipate that it'll be interesting to see what supply and demand for these tokens look like for essentially a new foundational technology during a paradigm shift to a new economic age that's based on trust, automated trust.
Thanks, Joe. So, Hester, if you wanted to give our participants a key message to close with, what would you say?
Well, for the DeFi community, I would say, come talk to me. Tell me what it means to regulate the technology, to not regulate the technology, but to regulate the uses of it. Come talk to me about what that means in practice. For the CeFi world, I would say, don't try to employ regulation to stop DeFi from developing, but look for ways that you can interact with it to the extent that that's valuable for you, and you can then be part of the growth that's going on in that part of the economy. And then for regulators, I would say, go back to basics. Remember what it is you're there for. You're there to set up a good regulatory framework within which the citizens that you regulate are able to interact with one another, enter into transactions that are mutually beneficial to them. And so our role is not to step in and make decisions for people, but it's to set up a regulatory mechanism within which they can make the decisions that best serve themselves.
Thanks, Hester. David, a key message for our participants.
Great. Yes, thanks, John. And again, thank you to hosting this great panel. I guess I would reflect back on the fact that more than 25 years ago, the internet ushered in an entirely new way of doing business for the world. And over the last 10 years, we've seen the next evolution of what distributed ledger technology and blockchain technology can do to create applications that really can open up an entirely new ways of doing business. And we're very much in the early stages of that, but encourage regulators to pay very close attention to this space, because we are often moving forward. I think that goal of financial inclusion, or using blockchain technology to enable greater financial inclusion, is a very legitimate goal. We haven't scratched the surface on what that means or how we get there, but I think it will increasingly become a focus of the industry. And I look at what we're trying to do in stablecoins in general. We're trying to connect the world, and that means the entirety. And we're just on the beginning of the journey, but we're making real progress. And I couldn't be more excited about what I think the next 5 to 10 years hold in terms of what we can achieve.
Thanks, David. And Sheila, we'll give the last word to you. What's the key message you'd like to leave participants with?
Thanks, John. I just remind everyone that we are really in the early days of this innovation. And so the things that are going to be present 5 or 10 years from now have probably not even been imagined yet. The potential is absolutely enormous, both in spaces like financial inclusion. This is a shift, I think, to be embraced, not feared. And so I would encourage everyone, regulators, CeFi, participants, everyone, to really kind of think about, where have we been failing parts of our population? Where have our systems not reflected some of the ways that we actually engage in our society in the new digital era? And how can we leverage these new innovations to ensure that we're creating a more rational world? I think Joe referenced earlier the idea of digital natives. We're going to have crypto natives that are being born every day. And so the way that they're going to be engaging in the financial system is going to be very, very different from the ways that my parents or even I have done. So again, I think it's something to be celebrated. It's tremendously exciting, but it's also very early. So it's a space to watch closely.
Well, I want to thank all of our participants for this great dialogue, and we'll look forward to the next sessions in the summit. Thanks, everyone.
Thanks, everyone.
Thank you.
Thank you.